capital markets play an important role in the overall development of the economy. It provides an effective source of investment in the economy. In addition to the resource allocation, capital markets also provide a medium for risk management by allowing the diversification of risk in the available avenues. This course focuses on creating great insight into the various concepts like structure, function, and types of capital market. It gives you a basic understanding of capital market instruments like equity, debt, and derivatives, and many more. So stay tuned and learn all that you can about capital market. If you haven't subscribed to our channel yet, I want to request you to hit the subscribe button and turn on the notification bell so that you don't miss out on any new update or video releases from Great Learning. If you enjoyed this video, show us some love and like this video. Knowledge increases by sharing, so make sure you share this video with your friends and colleagues. Make sure to comment on the video for any query or suggestions, and I will respond to your comments.
Hi, welcome to this video on capital market. Okay, so for all the organizations or all the business or all the companies, they require this capital. Okay, without capital or without investment from the investors, okay, it is very difficult to manage all the activities in the organization. So we will see what you mean by this capital market, okay, and what are the functions, objectives, other things in the capital market. We are going to learn in this session. We will discuss agenda. Okay. So first one, we are going to discuss about introduction to capital market. So what is the brief introduction or history about the capital market that we are going to discuss here. And next, meaning and definition of capital market. Okay. So what is the meaning of capital market and as per the definition? Okay. So we are going to know what you mean by capital market. Next, features of capital market. So what are the main features or characteristics of the capital market that we are going to see? Next, importance or scope of capital market. So what is the importance or what is the scope of capital market? Okay, played in the all the organization or with the investors. Okay. Next, functions or roles of capital market. What are the major functions involved in the capital market that we are going to discuss? Types of capital market. Okay. So we are going to see what are the different types of capital markets are there and what are the main functions of the different types of capital market that we are going to discuss. And next, capital market instruments. So what are the capital market instruments are there? Or what are the instruments they are going to trade in the capital market that we are going to discuss. And next, structures of capital market. What is the structure or how the capital market will run? Okay, that structure we'll see. And next, difference between capital market and money market. So in the financial markets, we have two different categories, that is capital market and money market, correct? So we'll see what is the difference between this capital market and money market, or how unique from the money market the capital market is. Okay, that we are going to discuss. Next, global capital market. Okay, what is meant by global capital market and what are the instruments they are going to trade in the global capital market that we are going to discuss. Okay, let's start with the introduction to capital market. So before we have jump into the capital market, okay, so first I will tell you the difference between capital and investment. Okay, we have the difference, correct? Capital is different, investment is different. Okay, so capital is nothing but the proprietor or the owner. If he invests his own money or whatever the money he invests in his organization, then it is called capital. Okay. If for example, if I'm the owner of XYZ company, so in that XYZ company, whatever the XYZ amount I'm going to invest, that is capital. Okay. That is not an investment. If for example, in the same XYZ company, ABC person is going to invest his money, then we call it as investment for ABC person. That is not his capital. That is capital of this XYZ company. For that capital, the ABC person is invested is money. That is the investment. In a simple word, capital, the owner is invested is money or money in the organization or in his own organization. Okay, that is called capital. And other persons or outsiders, okay, if they are going to invest their money in that company, then it is the investment for the other persons. That is not the capital for them. Okay, so this is the difference between the capital and investments. Now we will begin with the capital market. Okay, the market where investment instruments like bonds and equities are traded is known as capital market. So in a simple term, wherever the equity share or bonds, debentures, okay, securities they are going to trade, that place we call it as capital market. Okay, the primary role of this market is to get investment from investor who have surplus funds to the ones who are running a deficit or one who needed that money. Okay, for example, that XYZ company requires 10 lakh rupees. Okay, for the purpose of, for example, purchasing the plant and machinery or to set up the new plant for the new product line, or they need to diversify the fund from the X activity to Y activity. So for that they require fund. So on that time, what they are going to do? They are going to issue the shares or they are going to issue the bonds and they are going to collect the money from the public or whoever they have the surplus funds, that is extra funds they have, they are going to invest in their company in the form of purchasing the securities of that company, and they are going to pay money for the organization. So that is the one who having the surplus funds and they are going to transfer to the one who needed that money. So this is the brief introduction about the capital market. So next we'll see what is the meaning and definition of capital market. Okay, so capital market is a market where buyers and sellers engage in trade of financial securities like bonds, stock, etc. So this is the place where all the buyers and sellers, that is the company and the investors, okay, they are going to engage in the activity of trading. Trading is nothing but buying and selling of securities. So what are the different securities are there? That is all your financial securities. Okay, like bonds, stocks, equity share, preference share, debenture, okay, etc. That they are going to engage in the trading activity. Okay, the buying or selling is undertaken by participants such as individuals and institutions. So which are the buyers and sellers are engaged in this capital market means the institution or the all your companies, okay, who are going to issue the shares or issue the stock. Okay, they are the institution, and one who have the surplus fund, that is all the investors or all the common public. Okay, they're ready to invest their money. So they called as an investor. So these are the two persons are engaged in this capital market. Capital market help channelize surplus funds from savers to institution, which then invest them into productive use. The one who having the surplus fund. For example, okay, I have the surplus funds of 10,000 rupees. So if I have the surplus fund of 10,000 rupees, if I'm ready to invest somewhere else, then it is fine. Or else, whatever I have kept the 10,000 as a surplus, that is the not usable for me, or it will not give any return to me, correct? So whatever 10,000 I kept in the locker, the same 10,000 I'm going to take after 1 year. In that also the present value, if you calculate the present value, the value of the 10,000 is decreased to 8,000 or 9,000 rupees, correct? So instead of keeping that money in the locker, okay, the one who having the surplus funds, they have the knowledge of investing their money or earning the money to money. That is whatever your surplus is there, that is going to get the return, or that is going to earn the extra money. So for that purpose, they are going to invest, correct? So in this capital market, the one who having the surplus funds, they are going to get that money from, and they are going to give it to the institution or whichever the company is required. or in the need. Okay. Generally, this market trades mostly in long-term securities. Okay. This capital market, especially for only long-term securities, or to raise the long-term funds, only the capital market is exist. Okay. So this is the meaning and definition of capital market. The next topic, features of capital market, or nature or characteristics of capital market. So we'll see one by one. First one, it has two segments. What is the two segments in the capital market means? That is your equity and debenture. I will tell you the difference between the equity and debenture. Okay. The equity shareholders are the real owner for the organization. They are not going to take the fixed interest or fixed dividend. Okay. Based on the company profit. Okay. According to the general body meeting, they are going to decide how much dividend we need to given for the equity shareholders. Depending on that, they are going to get the dividends every year. And by the time of closing the company also, first they are going to finish or they are going to repay all the debts. Okay. Finally, they will come to the equity shareholders. If they have the fund, yes, they are going to pay to the equity shareholders, or they are not going to pay also sometimes. Okay. So here, and if company having the profit, then only they are going to get the profits as a dividend. If they have the loss, then they need to bear. Okay. They bear the losses of that organization also. So that is the equity share. When it comes to debenture, the debenture holders are the third party or outsider for the organization. Okay. They are not the owner. Okay. And they don't have any voting rights. Okay. So just they need to invest their money in the debenture, and whatever the maturity period is there, on that maturity period, they are going to get back their investment money. That is how much they have invested in the debenture, they are going to get back. And for every year, they are going to give the fixed interest. Okay. If, for example, it is predetermined. When they are going to issue the debenture, on that time only they are going to decide what is the rate of interest paid for the debenture. If, for example, they have decided for 10% debenture or 12% debenture or 14% debenture. Okay. As per the predetermined, okay, they are going to pay the interest for the debenture holders. And whatever the situation of the organization, okay, they need to repay the money for the debenture holders because it is a debt instrument. Okay. So this is the difference between the equity and debenture, or equity and debt. So these are the two segments the capital market run. In this capital market also, we have two types, that is primary market and secondary market. Okay. That we are going to discuss later. Second point, it deals in long-term securities. So in the capital market, the main focus or main objective of this capital market is to raise the long-term funds. They are not going to deal with the short-term. They only deal with the long-term funds. More than 10 years or 20 years or 30 years. For that kind of capitals or for that period of duration only, this capital market is going to concentrate. Okay. So here, all the companies, instead of going for the long-term loans or for the term loans, for other things, okay, they will issue the equity, debenture, bonds, and they are going to collect the long-term funds from this capital market. That is also one of the feature of the capital market. And next, it perform trade-off function. Trade-off is nothing but the selling and buying. Okay. In this, we have already discussed the meaning of capital market. Correct. So here they are going to trade all the long-term securities. Next, it perform trade-off functions. Trade-off is nothing but the buying and selling. Correct. So this is the place, or this is the market where all the long-term funds they can raise through buying and selling. So they are going to create one platform for whoever they need to purchase or they need to invest their money, and which are the company or institution who require to raise their money or raise their capital. For that, this is the place. Next, it helps in capital formation. So whatever the companies are going to issue long-term securities like shares, debenture, stock, bonds, etc. Correct? So why they are going to issue? They need capital. Correct? So for that purpose, they are going to issue securities in the capital market. They are going to raise the capital and they are going to form the capital requirement, or whatever the required capital they are going to get from this capital market, and how much equity they need to issue and how much debenture, so that they are going to form in the organization, and then they are going to sell in the capital market. Next, it helps in creating liquidity. How it will helps to create liquidity means, in this capital market, they are not going to only sell, correct? So buying is also there, correct? So for example, if the company issuing, yes, they are going to issue in the capital market first time, that is in the primary market. When it comes to the secondary market, so in the secondary market, all the existing shares and securities they are going to trade, correct? So if I have purchased some shares in the 2019, so today what I'm going to do, I need to sell that. Okay, I require money for whatever the reason, so I'm going to sell my shares today. So I can sell in this capital market and I can get whatever the market value is there per share and how many number of shares I am having. So that multiply that amount I'm going to get. So that is liquidity. Liquidity is nothing but selling the securities. Okay, whatever the existing shares or securities are there in the market, so there come and they are going to sell their securities in the market. Next, important or scope of capital market. So is there any importance or scope of capital market? Yes, absolutely. We have some importance. So we'll see what are the importance of capital market. So first one, mobilization of savings. So this capital market will increase or will improve the savings habit of all the individuals. So otherwise what they are going to do? They are going to spend on some other thing. Okay. But this capital market, it is very important. They are going to create the mobilization habit of savings. So all the investors, they are going to start saving the money and they are going to purchase the securities in the capital market. Okay. So on that time, this capital market will play a very major role in the creating the habit of saving the money. Okay. So next, second point, long-term funds. The capital market only for in the capital market, they are going to trade only long-term securities, correct? So more than 10 years or 15 years, 20, 30, 40 years, that kind of duration securities are traded in the capital market. So this capital market is very, very important to raise the long-term funds for the organizational needs. Okay. So the organization require so much of huge capital for a long duration. They are going to invest in plant and machinery in crores. They need to invest money on land and building for all the activities. Okay. They need to invest their money, correct? So for that purpose, they require these long-term funds. Okay. Either they can get from the bank, that is commercial bank or any other financial institution, they can get the term loans. Otherwise, they can otherwise they can issue shares, debenture, securities in the capital market. That is the one of the sources for their fulfilling the long-term funds. Next, capital formation. I think so. You know the meaning of capital structure, correct? So in the organization, or if you look at any balance sheet or any financial statement, in the balance sheet or in the financial statement, they are not going to record only capital, or they are not going to record only share capital, correct? So we have different kind of securities or different kind of capital we have. that is equity share capital, preference share capital, okay, debenture capital, and retained earnings. Okay, so these are the few avenues are there, or these are the few sources are there. So they are going to make the combination of all these avenues, and then they are going to form the capital structure in the organization. So in this capital market also, we are going to trade all your equity share, preference share, debenture, bonds, etc. Correct? So all the form of, or all the avenues, or all the sources of long-term securities we are going to trade in the capital market. So it will help to form the capital formation of the institution. Next, proper regulation of funds. So in the capital market, is whatever the savings habits they are going to increase, or they are going to start doing the, or start savings the money, they are going to invest on the securities or shares. That money will be the useful for the organizational needs. Correct? So this capital market, they are going to regulate the all the funds. It will not mislead any other things. Okay, that is one of the importance of capital market. And the last one, speed up economic growth. So instead of keeping money in the locker, if you invest in securities, or if you invest in other companies, that is XYZ, ABC, whatever the companies you are going to invest, that money they are going to utilize, or they are going to properly utilize that fund, or they are going to use that fund effectively and efficiently. Okay, so on that time you will also get the money, and for that in economic, the money circulation will be there. So it will speed up the economic growth also. And in this capital market, not only the domestic investor, the international or foreign investors also, they can invest their money, so that foreign cash inflow or foreign currency inflows will be there in our Indian economy. And we are going to pay the return for whatever the amount they have invested. Okay, so this is the speed up of economic growth. So these are the few importance of capital market. Next, functions or roles of capital market. So what are the functions, or what are the major roles played the capital market, that we are going to discuss now. And here we have few functions or few roles played by the capital market. So we'll see one by one. First one, capital formation. So capital formation is nothing but they are going to form, or they are going to pooling the capital, or pulling the money from the all the investors, and they are going to form a capital. That is, capital is required in huge amount, correct? So not from the 1% or 2% we can collect. So that needs to be collect from so many n number of persons. So whatever the available avenues are there. Okay, so we already discussed, that is equity share, debenture, preference share, bonds, certificate of deposit. Okay, so many other instruments are there. So that instruments they are going to trade, or they are going to sell, and they are going to collect the money from the investors, and they are going to form the capital to the institution. That is the first and primary function of capital market. Next, economic growth. How it will be important in the economic growth, or how it will be contribute to the economic growth of the country. In the capital, okay, whatever the companies required capital, that all the investors they are going to invest, correct? And not only from our Indian investors, okay, they are going to collect the money from the, or whoever is interested in investing in our Indian company, we are going to collect the money from the outsiders also. That is, foreign citizens also, they can invest their money in our Indian company. So on that time, we have the inflow, that is cash inflow or currency inflow will be there. So on that time, the money circulation in the economy, it's good, or the sound monetary will be there in the economy. So indirectly, it will use the economic growth of the country, or indirectly it will influence for the economic growth of the country. Next point, industrial growth. So without investment or without money, we cannot form the company, correct? So without form a firm also. So on that time, this capital market plays a very important or major role in industrial growth. Correct? If you are going to start a small company, means is you require at least minimum of 1 to 10 lakh rupees. Okay. If you want to start a small company, okay, you require money. So if you have the money, yes, you are going to start. If someone is not having the money, on that time, the various avenues are there. Okay. So they are going to getting the money from the various available sources. So this capital market is also provides the capital for the all the institution. So according to that, they are going to start the companies and they are going to increase the industry's growth in the country. Next, technical assistance. So in the capital market, okay, without any knowledge, okay, you can invest your money. Nowadays, yes, investment banking is there, merchant banking, brokers are there, sub-brokers, so many other peoples will be there, correct? They are going to invest your money, but technical assistance or technical information will be provided by the capital market. So whatever the money is going to transfer or whatever the share certificate or debenture certificate they are going to transfer, that directly comes to you in the electronic form. Okay, whatever the demat accounts are there, in that account we can easily access whatever the number of shares, which company shares, and what is the return you are going to expect, and in which year you have get the or you have got the your returns. Everything we can check through this capital market assistance or through capital market technical assistance. Okay, so this is also a major function of this capital market. Next, regulations of funds. How it will be regulating the funds means the whatever the institution requirements, okay, they are going to take the permission or authorize it from the whatever the boards are there. From that they are going to take the permission and then only they are going to issue the securities or shares, debenture, any other things, correct? So they are going to issue in the market. So they are going to regulate for all the transaction. Okay, I think so. If you are doing the stock broking or if you are in the investment or if you are there in the investing, you know, for each activity, okay, for transaction, they are going to take the money, okay, in form of the commission, okay, or charges. They are going to charge for the each activity or for the each transaction. So they are going to regulate the funds from your account. For example, if today I'm going to purchase 10 shares of XYZ company. So that money they are going to collect from my account and they are going to transfer to the whichever the company or whichever the person have purchased that shares or that security. For that particular person, they are going to transfer. So that regulation functions will be taken care by the capital market. Next, mobilization of savings. So whatever the savings we have made or whatever the habit it creates to save the money, that money will be utilized in the proper manner or utilized in the effective and efficient manner in the organization or by the organization. Next, connects investor and institutions. So this is the place where all the investors and all the institution, they can connect or they can meet. Okay, because these investors having the huge money or the surplus funds, and these companies or institution, they require money for their activities. Okay, so this is the place where they can meet each other, that is investors and the institution. So they can these investors, they are going to invest their money, and institution in return they are going to issue the securities and they are going to pay the returns. And the last one, availability of funds. So it will make sure the funds are available for the organization. Okay, it may be for equity, debenture, preference, bonds, etc. Okay, for all these avenues or all these securities, here we can get the money in the capital market. So all the securities will be traded and the money or funds, they are going to make sure that available for the organizational needs. Next one, types of capital market. So in the financial institution, under that we have two categories. that is capital market, money market, correct? So under capital market also we have two kinds or two classification, that is primary market, secondary market. Okay, so these are the two types of markets, that is capital markets are there. So we'll see what do you mean by this primary market. Okay, the word indicates primary. Primary is nothing but the first time, or primarily they are going to issue the securities, correct? So in the primary market, only which are all the securities freshly they are going to issue, that are available in the primary market. For example, the XYZ company is going to issue 10,000 numbers of equity shares. So this is first time they are going to issue 10,000 equity share from the XYZ company. So on that time, the company needs to issue all these 10,000 shares of equity shares in this primary market only. This primary market, especially for IPOs, that is initial public offerings, only which are all the shares or securities first time they are going to issue in the market, okay, or first time they are going to issue to the public, that they are going to trade in the primary market. Okay, other than that fresh issue, they are not going to sell anything in the primary market. Okay, when it comes to secondary market, okay, so here also the word only indicates secondary. It is not a primary, it is secondary. That is already existing securities or already existing shares and debentures in the public or in the market, that they are going to trade in the secondary market. For example, whatever I have purchased 10,000 number of equity share from the XYZ company in the primary market. After 1 year, what I'm going to do? I'm going to sell 5,000 shares in that 10,000. Okay, I required only 5,000, remaining 5,000 I'm going to sell. Where I need to sell? On that time, yes, we need to sell in the secondary market only. On that time, we cannot go to the primary market and then we can not sell that remaining shares or whatever the shares I'm going to sell. That is not possible. Okay, only the companies or government, they can freshly issue shares or securities in the primary market. In secondary market, all the who are the investors are there. Already they have invested their money in any securities, shares, debenture. Yes, they can sell in the secondary market. So we'll see what is the difference between this primary market and secondary market. So next topic, difference between capital market and money market. So we already known what is the meaning, definition, functions, features of capital market. Now we will discuss what is the difference between this capital market and money market, or how the capital market is unique from the money market. Okay, so we'll see the difference. Capital market, place where long-term borrowing take place. But while it comes to the money market, where short-term borrowing take place. Okay, so in the capital market, only we can raise the long-term funds, correct? We can get the long duration of funds. But when it comes to the money market, only the short period or short-term money or short-term funds we can raise through this money market. Second point, time period is more than 1 year. Yes, absolutely. Long-term is nothing but more than 1 year. Okay, it may be 5 years, 10 years, 15, 20, 30, 50 years. Okay, so that is, we call it as long term. Okay, in the money market, time period is 1 year or less than 1 year. So it is approximately 1 year or less than 1 year. That duration will be there in the money market, or only this duration of funds we can raise through this money market. Next, instruments like shares, debentures, bonds, securities of government. Okay, in the capital market, we can trade. These are the few instruments. We have so many instruments. Okay, so shares, debentures, bonds, and other government securities, they are going to trade it in the capital market. While it comes to the money market, only the instruments like certificate of deposit, commercial bills or commercial papers, treasury bills that we can trade in the money market. Next, under the capital market, the long-term credit for expand or diversification. So the company can use the long-term funds for the diversify their activity. Okay. They are going to start a new plant. Okay. Or they are going to purchase plant and machinery, land and building. For that fund, okay, for that reason, they are going to get this long-term funds. Monetary market or money market, here only short-term credit required for small investment. Here the long-term companies will come and here the short-term companies. Okay, for short-term needs, they are going to come to the money market. Next, putting for capital work. Here, whatever they are going to raise the capital, okay, or long-term capital, they are going to keep it for the capital purpose. Okay, long-term purpose or for long duration. Whilst comes to the money market, okay, the money market only for liquidity arrangements they are going to do. That is, in the short term, they are going to sell and they are going to make money. Okay, that is the liquidity arrangements. And the last point under capital market, stock exchanges, commercial banks, insurance companies, mortgage banks, etc. So these are the key players are there in the capital market. Okay, either they are going to issue or they are going to purchase the securities from the capital market. While it comes to the money market, the central banks, commercial banks and NBFCs, that is non-banking financial companies, they are going to involved in this money market. So these are the few difference between the capital market and money market. Capital market instruments. So these are the few capital market instruments will be traded in the capital market. So first one, equity. Second one, credit market instruments. Third one, bonds. Fourth one, foreign exchange instruments. Fifth one, hybrid instruments or hybrid finance. And the last one, derivative instruments. So we'll go one by one. First one, equity. So equity shares are the stocks. They are going to sell the companies. Majorly all the companies will go for equity share. These equity shareholders are the part of the owner or the real owners for the organization. Correct? And these are the equity shareholders. Okay. They need to or they can involve in the any managerial activities or managerial decision activity. They are going to conduct meeting. Okay. Whatever for any changing the policy or any other things, if they get the majority, then only they can implement in the organization. Here, this equity shareholders having the special feature called voting rights. Okay. To select any board members or for any other managerial decision also, they can give these rights or they can participate in the managerial decision activities. So, these equity shareholders, they do not get the fixed dividend. Okay. Based on the company profit. Okay. In the general body meeting, they are going to discuss and they are going to decide how much we need to provide the dividend for this particular year. Okay. According to that, they are going to get the dividends. For 1 year, they can get 12%. Other year, they can get 13%. Or some year, they are not going to get also. Okay. So, these equity shareholders, they do not get the fixed return for their investments. So that is the equity. Second one, credit market instruments. Credit market instrument is nothing but debenture. So in the debenture also, we have so many types of debenture. That is convertible debenture, non-convertible debenture, redeemable debenture, irredeemable debenture, okay, secured debenture, unsecured debenture, okay. So many types of debentures are there. So in that, whichever the company is going to issue, okay, they are going to purchase from the capital market only the first time. That is, whatever the debenture holders are there, they are not the real owners for the organization. They are like a outsider or third party for the organization. They have invested in the debt instrument. After that, per particular year, they are going to get the fixed interest. For this debenture, they have the predetermined interest rate will be there. that amount they are going to get every year, whether the company is going to make profit or under the loss. Okay, but they are going to get the particular or fixed return will be there for the all these credit market instruments. Next, bonds. Okay, bonds is also long-term instrument. Okay, they are going to trade it in the capital market. So these bonds also, the predetermined interest rate will be there. Okay, so for that, fixed income or fixed interest will be paid by the government. Usually the governments will issue this bonds. Okay, now not all the companies or no companies are eligible to issue these bonds. Only the government companies or government is going to issue these bonds in the capital market. Next, foreign exchange instruments. So few instruments they are going to do in the foreign exchange also. Okay, so with our Indian currency to other country currencies, they are going to trade and they are going to exchange. Okay, next, and very important, hybrid instruments. Hybrid instruments is nothing but it is a combination. Okay, it is a combination or mixture of whatever the available avenues. Okay, the main intention of this hybrid financing is to they need to minimize the risk and maximize the return to the stakeholder or the securities holder, and they need to minimize the risks and maximize the returns for the investors. They have done this hybrid instruments. And the last one, derivative. Okay, this derivative instrument, it is a large market or large security market is there. Okay, so derivatives is nothing but these instruments, they do not have the own value. It is going to depending on the underlying assets value. Okay, and in this derivative we have 4 different types of derivatives are there: future, swap, forward and options. So these are the 4 types of derivatives are available. Next, structures of capital market. So this is the capital market. In this we have the markets and instruments and intermediaries. Okay, so when it comes to the market, yes, we have already seen primary market and secondary market. Okay, so in the primary market, all IPOs, that is fresh issue, that they are going to trade in the primary market. While it comes to the secondary market, already existing shares or already existing securities will be traded in the secondary market. So this is the one. And next comes to the instruments and intermediaries. So instruments, just we have seen which are all the instruments, that is equity share, debt instruments, bonds, hybrid financing, derivatives. Okay, that are the instruments. And which are all the intermediaries are involved in the capital market means brokers. Okay, investment bankers and underwriters. These brokers, what they are going to do, they are going to take the activity or they are going to act on behalf of the client. Okay, whatever the activities, okay, they are going to do, and they are going to take some percentage of commission from the investors. Okay, and next, when it comes to investment banker, yes, investment banker, they are specialized in this investing activities or in the issue management functions, advisory function, consultancy services. Okay, so they are also act as a client's agent in the capital market. And the last one, that is underwriters. Underwriters are nothing but these are the agencies. Okay, they are going to take the institution, they are going to take these underwriters for the subscription purpose. Okay, so whatever the company is going to issue shares or securities, that completely 100% sold or subscribed in the market. To make sure that 100% subscribed or not, they are going to take this underwriter. It is like a assurance for the companies to get the complete subscription of shares. Next, difference between primary market and secondary market. So we'll see what is the difference between this primary and secondary markets. Primary market, it is for fresh issue. That is, only initial public offerings will be done in the primary market. While it comes to secondary market, only the existing securities or existing shares that they are going to trade in the secondary market. Next, while it comes to the primary market, regulated by SEBI and Companies Act. So as per the Companies Act, the companies will follow and they are going to issue the shares. Correct? Whatever the procedure or guidelines will be there, they are going to follow, and then only they will get the permission to issue the shares as per the Companies Act. After that, they are going to list it in the SEBI, and then they are going to start issuing in the primary market. So these are the regulated body in the primary market. While it comes to secondary market, regulated by SEBI and stock exchanges. Okay, as per the SEBI rules and regulations, they are going to follow, and as per the stock exchange, that is NSE and BSE is there. Correct? So these stock exchanges will be there in the secondary market. And next, under primary market, the price of the shares will be determined by the companies only, because first time they are going to issue. Correct? So they have all the eligibility or all the authority to fix the price per share. But when it comes to secondary market, the securities or instruments price purely depends on the demand and supply. If the demand is more, supply is less, yes, absolutely the price for security is high. If the supplies are more, demand is very less. So on that time, the security price will be very lesser. So depending on the demand and supply, the secondary market securities price will be there. And comes to the primary market. So putting for capital work. So they are going to issue for a long-term securities, and that whatever the amount the companies is going to collect, that they are going to put for the capital works. Okay. And when it comes to the secondary, it is for liquidity arrangements. Okay. In the secondary, what they are going to do, whoever purchased the shares, okay, they are ready to sell now. So they require money or for other purpose. Okay. They are going to sell the securities in the secondary market, and they are going to convert the securities into cash. That is the liquidity arrangements. And under primary market, last point, the merchant banker, underwriters, collections bank, etc. So these are the persons will be there in the primary market. So this merchant banker, all these issue management functions, they are going to take care. Underwriters is 100% subscription. For that purpose, the underwriters will be there. And collection banks, whatever the investors, from them, the company needs to collect the money. Correct? So this collection bank act on the company side. Okay. They are going to collect all the money from the investor and they are going to send it to the company. While it comes to the secondary market, only brokers, sub-brokers, etc. They are there in the secondary markets. Okay. So these are the few difference between the primary and secondary market. Next topic, global capital market. So till now we have discussed the capital market. That is our Indian capital market. There also the foreigners can come and they can invest their money in our capital market. Now we are going to discuss about the global, global capital market. A global capital markets is the interlinking of various investment exchanges around the world that enable individuals and entities to buy and sell the financial securities on an international level. Okay. So this is the place where all the world can come and they can purchase the whatever the company, international company security shares and other instruments. Okay. This is the place where all the world or all the countries of securities, all the global company securities, they are going to trade in this global capital market where all the countries, investors, they can come and they can purchase, and all the companies also come and they can issue their shares or securities in this global capital market. So in the global market, risk and benefits are high. Okay. The risk is also very high and the return is also very high in the global capital market because it is purely depending on the entire country, economic conditions. Okay, if I'm example, I'm going to invest in XYZ country company. So on that time, the whole economic status of that company or economic status of the country is depending. Okay, so we are going to invest in some other international companies. So on that time, the risk is also huge and they are going to pay a very good return also. Global equity market. Yes, in the global equity market, yes, high return and high risk will be there. International bond market. In the global capital market, we have these two categories, that is international bond market and international equity market. How we have here primary and secondary. There they have international bond and international equity. So here only the equity shares will be traded in the international equity market, and while it comes to the international bond market, here all the bonds will be issued and subscribed in the international bond market. So in this international bond market, especially they are going to trade with the foreign bonds and euro bonds. And while it comes to the international equity market, foreign equity and euro bonds, these are the investments or these are the securities they are going to trade in the global capital market. So euro bonds will be traded in the international bond market and it is going to trade in the international equity market also. Next, summary. Here we have the quick recap of what we have learned in this session. First, we have discussed the introduction of capital market. So what is the general meaning of capital market and how it will work, that we have discussed in the introduction. Next, meaning and definition of capital market. So here we have discussed what is the meaning and definition of the capital market. So capital market is a place where all the buyers and sellers, they are going to engage and they are going to trade the financial securities, correct? So that we have discussed. Features of capital market or characteristics or natures of capital market. That is, it has two segments, primary and secondary. It deals in long-term securities. It performs trade-off function. It helps in capital formation and it helps in creating liquidity. So these are the feature of capital market. Next, importance or scope of capital market. So mobilization of saving, long-term funds, capital formation, proper regulation of funds, speed up economic growth. So these are the topics we have discussed in the importance or scope of capital market. Next, functions or roles of capital market. Capital formation, economic growth, industrial growth, technical assistance, regulation of funds, mobilization of savings, connects investors and institution, availability of funds. So these are the functions or major roles played by the capital market. Next, we have discussed the difference between capital market and money market. So what are the differences or what is the unique from the money market to capital market, that we have discussed. Types of capital market. So in these types of capital market, we have two kinds, that is primary market and secondary market. So in the primary market, only the fresh issue or initial public offerings will be done in the primary market. While it comes to the secondary market, only the existing shares and securities that they are going to trade in the secondary market. Next, we have discussed the difference between primary market and secondary market, correct? Next, the capital market instruments, that is your equity shares, credit market instruments like debentures, bonds, foreign exchange instruments, hybrid instruments and derivatives. This we have discussed. Next, we have discussed structures of capital market. That is, under the capital market, they have market and instruments and intermediaries. So under the market, we have primary and secondary market, and in the instruments and intermediaries, brokers, investment bankers and underwriters will be there. Next, the global capital market. In the global capital market, all the companies or all over all the countries' securities, they are going to trade in the global capital market. Thank you.
If you haven't subscribed to our channel yet, I want to request you to hit the subscribe button and turn on the notification bell so that you don't miss out on any new update or video releases from Great Learning. If you enjoyed this video, show us some love and like this video. Knowledge increases by sharing, so make sure you share this video with your friends and colleagues. Make sure to comment on the video for any query or suggestions, and I will respond to your comments.